Welcome to That Annuity Show, the podcast that will make you an expert in explaining annuities to your clients. Give us 30 minutes each week and we'll shave hours from your client presentations. Now, here's your host, Paul Tyler.
Hi, this is Paul Tyler, and welcome to another episode of That Annuity Show. Laura.
It's great to be here, Paul. You know, it's been a minute since I've joined an episode, and I can't wait for today.
I know. Only fitting to pull you in with a tech, not only technology topic, but also a Worksite topic. And we'll talk a little bit more. We've been doing, had a partnership with Symetra talking about the future of work. This almost could be one of those episodes, I think, as well. Hey, Bruno, Canada. It's got to be nice in Canada right now. It has to be.
It actually is.
Good.
It actually is. And Worksite and technology, excited to be here.
Excited to be here. Yeah. So as I kind of hinted, today we are diving into the evolving landscape of workplace marketing for brokers, agents, and advisors in the insurance industry. And joining us today are three. I'm going to call you all visionaries. I think that would be good. Three visionaries in the space. Ash Rofail, founder of OneKonnect, and Yuval Sternshos and David Cohen, who lead the global engagement team at OneKonnect. And OneKonnect is interesting. We all before the show realized we probably have 3 or 4 different connections with each other in various forms. So I think your company name is very apropos. So, Ash, I'll start with you as the founder of the company. Maybe you could just sort of describe to people, you know, what is your company? What do you do? And you know, why should like people in the annuity or space sort of sit up and take note?
Sure. Thanks, Paul. So, OneKonnect it's probably known. We had a brand change. It used to be called eBenefits Network. And really, the name described what we were doing. We were building a network for benefits that was connecting groups to carriers. So over time, our go-to-market strategy was to embed our technology with platform and engage with platform partners rather than go after employer groups direct. So we built around 30 different integration were really embedded in these platforms, you know, the iSolve, the Sage, the Rippling, Zenefits, and so on. That's on one side. And on the other side, we built connectivity with, you know, close to 600 different carriers. And we sat in between. As these platform partners go and acquire new customers, we have access to the data. So we start automating the benefits enrollment process and life-changing events, you know, for those groups. So today we're in 30 different platforms, you know, 70,000 different employer groups, millions of records, and that's really the genesis that how the company started. And we started to really build new products on top of that foundation, this digital data foundation.
Well, and I guess where do agents and advisors fit in the ecosystem? We had one of our friends, Paul Blanco, on, who has a very large office based out of Connecticut, but he's built a phenomenal business partnering with some group benefits organizations. Mm-hmm. How are you connected with, and how do you plug in with your brokers or advisors who are doing business in the space?
Right. So the platforms that, especially Ben admin platforms that cater more to, you know, brokers, Employee Navigator, Ease at the time, iSolve, and others that are broker centric, or they have at least a model for end user groups as well as brokers. We engage mostly, I would say 80% with them through the partner. And then about 20% direct. And these tend to be the brokers that want to bring in automation. So they're more than just selling products. They really want to help their customers and the groups that they serve with improved service and push them towards automation, less manual work, which results in really less manual work for the broker themselves in terms of managing, these benefits. So we work directly with these brokers on the benefit connectivity and enrollment, and now where we have another product that seems to get more traction with brokers, which is billing reconciliation. So because that's something that puts money. The first one kind of saves the customer, their groups, time, effort, and labor, and then the second product, billing reconciliation, puts money back in the customers, their customers' pockets. And then the third product where we help them is we are now engaging in more marketing automation and sales automation for upselling and cross-selling for them. As we got to know brokers and what's important to them and how they service their customers, we really realized that post the initial interaction for selling a product, which is usually around open enrollment, they really have any interaction until the next open enrollment. They're out there looking for new customers or new groups. They are somewhat servicing their existing groups of mostly inbound, somebody calling into them and asking for something. So we started to develop an intelligent product as we sit on the data to let them be aware of life-changing events that match some of the products that they sell. So we use some examples that because we're sitting on this live data, if, for example, an employee changed an address and the broker happened to be in Allstate or some other insurance company, agent, and selling homeowners policy or home renters policy, we notify them immediately that there's a potential match. Someone changed the address, and maybe now it's the opportune time to reach out to them. We know when someone's position changed in a company or salary changed. It's a great opportunity to revisit life insurance policy. So most of these life events that matter to agents and brokers, historically, it's sort of a rear view mirror look, knowing that some of these events happened sometime in the past, so it's too late, or not knowing at all. So the technology that we're really, very passionate about right now and continuing to invest a lot in is that intelligent, data monitoring to help the agents and the brokers, sell at the time of need. So that's really what I would say is consuming most of our technology resources right now.
Oh, wonderful. And it seems to be that that the smaller employers have been benefiting a little bit from your services because they've traditionally been neglected just because of size. But you seem to have found a solution that fits well for them. Can you expand a little bit on that?
Yeah, so we're most of the, if not the platforms that we work on, the definition of small to us is anywhere 75 employee group. Of course, we have ones that are in the thousands, but these are the ones that if the technology is easy to use, it's not too expensive. In our case, it really isn't. Allows them to free more of their time on the benefits enrollment specifically. If they have 4 or 5 different carriers, it is time consuming, even with 100 employees, to be able to manage all the different changes and have to broadcast them to every single carrier. So they tend to appreciate the ability to just kind of be hands off. If something changed in my HR system, I added an employee, terminated, I do nothing. Which even for us, when we were a small company, I knew how much of my HR person's time was spent on just the basic maintenance, and management, of that, which is very important to the employees. If something happened, someone is missed enrollment or the delayed enrollment, and they go to the doctor, and they're not enrolled, or the kid's not enrolled, it's really a big deal, a big issue. So the more we're helping them automate, we free them, especially for the smaller, as you said, the smaller employer groups. We free them to do something else. The more we put money in their pocket for billing reconciliation, I can tell you from really personal experience. I had a CFO early on, and he would get the bill from the broker who gets it from the GA, and we pay it, and then that CFO left. So one time I was kind of browsing, happened to just be looking at employees, at the details of what we pay for insurance, and I noticed 3 employees are just no longer with us, and we're still paying for them. So I went and said, how come we're paying for these? And it was typical. It's like, well, we sent an email to the broker, and then the broker didn't reply. We talked to him. It was like, oh, I didn't get the email. It just sounds very trivial. But I think it was about $50,000 over a year, just a few employees. So those little automation, they don't seem like big taxing effort on small employers, but they have, and they're not expensive, but they have incredible returns in terms of value and time saved and money recovered, and so on. So we tend to think that only big companies would benefit from automation, but I think the smaller you are, the more need for automation you have, so that you can free your time, to grow and focus on more strategic things.
Yeah, Yuval, sort of a follow-up question for you, kind of on the same vein, and I'll give you a chance also to talk a little bit about your background. I started my career way back when working for MetLife, and they had MetLife, for those of you who don't know, has a huge group benefits business, but they're the giants, the companies that have hundreds of thousands of employees, and probably every 2 years the company would make a strategic effort to go downstream to some of the smaller companies, different strategies, call centers, reorganizing sales force, Is AI sort of the key that's going to unlock this level of service that Ash talks about?
It's a really good question. What we see eventually, or from my experience, is that traditionally insurance companies has a lot of data, abundance of data, and it really touches us all, from life insurance to car insurance, etc. We also see that carriers only take between 20 to 30% out of their database and leverage it. So when we are talking about the individual level, the financial advisor, the agent, it's really difficult to look at all of this data and glean trends or behaviors out of it. So I think this is where AI comes into the picture, leveraging the data, extraction the data, and gleaning insights. And it comes with a challenge. Obviously, there is an appetite in the industry for it. We do see that the harder part is the execution, which is really gradual.
So speaking of data, you must be obviously gathering data from various groups, different players in the industry. You also must be looking at a lot of data. Not sure what happened there. Am I back? Okay. So we were talking about data, and you just, by nature have a lot of data. Is there anything revealing in terms of this accumulation of data in the industry, and anything that you can share in terms of what the data reveals, or any insights that from this particular industry.
Yeah, I mean, I'll jump in. I'll say one thing from some of our past experience that Yuval and I both had was you really find a lot of missed opportunities to engage more frequently with the policyholder. So, you're missing opportunities to lower the CAC, to increase that conversion rate and increase policyholder persistency across potential, family members and or generations even, right? So what we saw was if you see certain events and you can predict, at least from our background, predict some of these events, maybe there's a different solution that an advisor or an agent can present to that policyholder to address underinsured or, cross-sell, upsell opportunities or an annuity, whatever the case may be, whatever is right for them. I would say, that's worked well. It worked extremely well where we were. But when you take a look at what we're doing here as well at OneKonnect, it's the sweet spot of kind of combining everything, because the AI and predictive is really doing just that. It's predicting based on past behaviors, what you think is going to happen. Ash had mentioned earlier on that we see that data in real time on real life-changing events. So you can really get down to proper messaging, the proper product or solution that would be right for that policyholder given their current life event change. So I think marrying both of those together, the actual with predictive, really opens up tremendous amount of opportunities for the carriers and the agents.
In the same way that when you're starting a career and you're getting taught about your 401k and there's investment, right? And you have a portfolio of options, and based on your age, they'll tell you which portfolio may make sense based on your risk tolerance and other duration and career. Wouldn't it be interesting? And I guess the question would be, is there conversation around a portfolio of coverage or a portfolio of products, a portfolio of services? So if you have someone based on data or trends at X age, I don't know if it's 24, 27, whatever that number is, they generally at that age may receive, their renter's insurance or their first mortgage, their first homeowners. From there you see, and then you can follow the series of events through, second home, if they're building a family, if they're going through any kind of health situation. I'd be curious if there's any talk around that, or if there's anything that you could see down the line, the three of you being visionaries. Is that something that we may see one day, with the understanding, of course, that would have to be tweaked to certain, keys turning on the need? But is there any talk around the portfolio of services like that?
I think it's beginning now. I mean, Yuval, you and I were both a part of that to a certain extent, making those, I think we used to call it people like you type recommendations. So given where you are based on your age and based on, two or three other characteristics, we know that across a large subset, people typically have this much coverage. People typically are in a home or renting an apartment or whatever. Maybe they're expecting a firstborn within the next, X number of years, and this might be the right solution today. So I think it's beginning, but I don't think it's, at least I haven't seen it, getting to the point where there's a menu, predefined menu based on target maturity, I guess we used to call it, right? Or target date in the investment side. So, but I think it's getting there in those baby steps. But Ash, if you have an additional comment on what you've seen.
Yeah, I mean, it's a really interesting question, because it's expected that if you're sitting on a lot of data, there must be some insights. That's unless you're really not doing anything about it. And I'm reminded by these ads that keep popping up that we see on Instagram or others, where they ask you, how many subscriptions do you have? And we all have like the Netflix and the Hulus and all of that, and they tell you how to optimize it. I think we're seeing some insights that says that benefits really needs to be managed more like a user experience of anything else in our lives. And what we're seeing for some of the insights is that when you take a group and then you have employees that sign up for a lot of voluntary benefits, and you start bringing in, for example, claims data, and then you have the enrollment data, and then you mush all that together, you realize that there's a lot of benefits that employees have bought for $5, $10, $15 that could cover, for example, a line item that is now they have to pay out of pocket. But because they don't have kind of the awareness of all of their benefits, because it's just not managed, that then we see a lot of missed opportunities for optimizing, all the different primary voluntary benefits. And we see that, and we look at it and say, oh, wait a minute, this should cover that, or it can help you here, but you're not doing anything about it. So what we're seeing is the more data we get from different sources, the more insights naturally we get, but also they're needed to optimize some of these missed benefits that are not utilized or underutilized, and just kind of from an education of the employees, which is we're also finding from the data that most, this is why big expansion, most employee groups don't spend time educating, and brokers don't spend time, educating, employees and employers. So we see a lot of missed opportunities. It's now data is becoming really so critical to enhancing the user experience for benefits and optimizing benefits as we keep consuming, more and more voluntary benefits. And we see that from our marketplace. People just go in and buy stuff.
Yeah, I guess, and David, I don't know, maybe, David, you've been in this business a long time too. I guess, how much has this changed? Because now I remember with the big clients, you'd think, okay, a company like MetLife must know everything about every employee who works for a Fortune 50. And Ash, you mentioned names. They didn't even get names. They would just get like, well, we have 251,571 employees, and this is what it cost. It was there really wasn't a very detailed, hand up between who the employees were and where they're. How is that changing? Is it changing at the large employer level, or is it still what you're describing at the, really are those personal connections all in the sort of smaller, the smaller employer market? And David, I don't know if that's for you, Yuval, or Ash, but
yeah, and I could chime in quick, and then Ash, expand upon it. I'll take it from a slightly different approach, Paul, from how you asked it. And Ash, if you want to directly hit it from the benefit side, from what you've seen, that'd be great. But from a carrier standpoint, your first part of the question, Paul, I would say it's begun to change pretty dramatically, but there's still work to do. And I think when Yuval and I got here at OneKonnect, we were assuming that most of these really, really large carriers, because they told us, right? They told us that we're really far along that innovation journey already. We've done the hard work already. That's great. Congratulations. We start to ask them a few more questions, and it turns out that, maybe they can't share data across different business lines. So maybe the life side isn't talking to the annuity side, or whatever the case may be. So, as you've all mentioned, you're not able to glean those, policyholder insights. So the carrier wasn't able to really react and position products or solutions that made the most sense based on the individual's needs. I think that's beginning to change, and that's a lot of the work we're involved in with the carriers, is helping to remove that siloed data, if you will. And then I think as you continue looking through it, even the from a distribution standpoint, it's changed, just because the agent knows that in order to really be successful, there's probably no easier way to do it than to really work with your existing book right now versus going out there to try and find new people continually. So I think, some of the companies that are out there, and as Ash has mentioned, we're one of those, is to try and help them get those better insights into your existing policyholders. And they're willing to take a look at it. They're willing to they're willing to take the time to properly message it based on the specific message that was probably going to lead to that higher conversion rate. And I think the policyholder ends up being a lot more loyal, sticky policyholder. And the agent obviously has a lot more persistency if and when, that policyholder separates from their employer. But Ash, I'll defer to you for the second half in terms of the benefit specific evolution.
I don't have really, much insight there. It's the same thing. We're finding as in the last year and a half, we're talking to, and I'll stick with the data, just the carriers and people that sit on a lot of data, is that they're not really doing anything. I don't see, honestly, in the last 10 years of in this domain that much has changed on the carrier. I think they are consumed with their core systems, underwriting systems, pricing, systems. I think the discussion around silos has been almost in every conference I've attended in the last 10 years. I don't think that has been solved. So to get to the point where you're reaching, the level of intelligence or the level of great user experiences, I think they're lagging a few steps to get to that point. And we tried to come in and show how they can reach that point incrementally without what we call, rip and replace. But I think the opportunities around when we talk about data and AI, I think the opportunities are still yet to come. I don't know a single entity carrier that has successfully implemented anything that helped on the benefit side, whether the upselling, cross selling, or education, or utilization, or enhancement. And I don't believe they provided any tools to help the agents, brokers, on the marketing, since really that's the topic we're talking about. I just don't see, I see huge and incredible opportunities. We haven't seen a lot of movement or change in experiences, whether the end user experience, the employee, the employer, or the agent, the broker, at all.
So we hear in the conversations we've had, that's something we hear a lot, right? That things haven't changed. They've been the same for a decade, 2 decades, 3 decades. From the work that you've been doing and the clients you've been working with, why do you think that is? Is it education? Is it insight? Is it culture? Is it people just continually wanting to do what they're comfortable with? What are some thoughts around that? And it could be a question for anyone,
I think,
any
Dave, you're
of the three of
closer
you,
to
really.
some of the, the sales push,
Yeah,
the responses that we
yeah,
get, that you probably have good insights there.
yeah. I was trying to not insult anybody as I was trying to answer that, but I don't think there is any one size fits all response because really every carrier response has been slightly different. I would say the vast majority, regardless of size, all understand that there is a need to innovate, need to implement technological changes to allow them to to get these insights that we're talking about. Some of it comes down to budget, where you are in the budget cycle when we initiate or they have these conversations. Others, there seems to be some sort of legacy technology that they have been told they need to rip out and replace, as Ash was mentioning, and others, let's just call it stuck within a project that's behind times and over budget, and they're trying to work through that. And sometimes you have folks coming and going within the carriers that's causing some delay. I would say, the conversations in a short period of time that Yuval and I have had on the distribution side have been pretty encouraging, especially with what Ash has laid out in the front end here, because it ties into all the pillars of what we really supported over the past 20 some odd years, right? They want better user experience. They want to know what's taking place within an underwriting review. They want to know what the bottlenecks are to getting things done. And that's really what we strive to do, is improve that communication amongst and across, all the constituents involved. But Yuval, if you have, or Ash, if anything else you want to throw out there.
Yeah, I think the only point there that I will add is that whatever you said before. So we see that I see the biggest challenge is the mindset shift of the carrier side. So the fact that the carrier is hyper focused on bringing new business, lead generation is much more like we now need to shift more to the in-force book or the the current clients and understand how to retain them, or how to upsell and cross-sell, because there is a lot of revenue that is able to being generated by that.
All right. Well, this has been great. We're near the.
Sorry, Paul. Go ahead.
Oh no. Well, let me just start. I'll give you a chance here in a second. So anyway, we're near the top of our hour, and I guess Bruno, any final questions or thoughts for the group?
Oh well, any insights on what new product could potentially come in the Worksite channel that was traditionally not coming through that particular channel?
Yeah, I think I'll jump in. I think from a Worksite standpoint, survey after survey that I've seen, be it a Limerick specific survey or some other survey, they're all talking about how the employees want, better well-being type solutions. So whatever those solutions are, if it's mental health, if it's behavioral, if it's anything, to help them that way. Plus, they want all the educational tools to better understand, their benefits. They just seems to be the vast majority say they don't even understand what they're being offered. So I think some of the solutions that, we're looking to specifically incorporate into this intelligent benefits portal that Ash mentioned are some of these educational tools. So why do you need such and such type of coverage? Where would such and such coverage fit in? Plus, if you want the well-being stuff, here are some other solutions from some of our partners as well. So I think that's where we've seen, the evolution going. And obviously there's different iterations of it depending how tranched you really want to get within that category.
Terrific. Laura, questions, thoughts?
I have my token question that I'm gonna ask actually, Yuval, because curious. You have a very interesting background. You could have joined any team, and you've been on several teams. What brought you here to this team, and what are you hoping to accomplish in the near future?
Well, my two bosses are here, so I will try to. I would say the challenge. I am really into challenging industries and solving complex problems. I feel that there is a lot of opportunity to grow in this space. And also any kind of position that incorporates both people and data is really interesting for me, especially from my background. I'm coming from the kind of intelligence background. So I found it really, really fascinating to get to solve this problem.
All right. Well, hey, thank you very much. Ash, thanks. Yuval, David, thanks for joining us. Laura, Bruno, good discussion as usual. And I would just ask all our listeners, give us feedback, and be sure to share this episode with other people. And join us again next week for another great episode of That Annuity Show. Thank you.
Thanks for listening. If you've enjoyed the show, please rate and recommend us on iTunes, Stitcher, Overcast, or wherever you get your podcasts. You can also get more information at thatannuityshow.com.